Sandip Agarwal joining in. He's fund manager and co-founder of Sowilo Investment Managers. Sandip, great to have you back on the channel. You know, we're tracking IT very closely this quarter because this is a sector and a group of companies that has caused so much division and confusion in opinion on what's going on. You have Wipro, which has reported yesterday, and clearly the street not too excited with the numbers. You have Tech Mahindra on the other side of the spectrum. How have you looked at both of these?
No, so good morning and thanks for having me on the show. So I think, confusion is in the minds of investors and analysts. There is no confusion, I think, in the minds of the companies. They are very clear. I was listening to the previous guest from Wipro, and he was so nicely explaining all the three layers, how they are working right now. And I think exceptionally explained. I believe that, we are too much worried about the short term. As I mentioned earlier also, and I reiterate that, I think the the enterprise AI will start now at some point of time. And when that starts, then all the fear of X growth, this industry's X growth or no growth, all that will, I think, go away slowly. You will see good growth coming in. The reason is very simple that, the hardware players have benefited. Foundational players are building and selling. They are also commercializing, and they will definitely at some point of time need two things. One, to service those, and second, enterprise AI also they will come into. So whenever that starts happening, then obviously you will need IT services players to go and implement it and service it. So I am very positive from that perspective. I think the large part of the pain is behind. The sector index itself has fallen by 40-50%. So the valuation comfort is also there. I don't see any reason to be, worried at this level except ER&D, because in ER&D, I still think there is a lot of froth in valuation, and also the disruption in ER&D will always be more than IT services. So that is what is my understanding, and I think all the companies in this quarter have reported decent number. Remember that this is probably an inflection quarter, or maybe the next one, where all the deflation of AI will be built in. So we should see numbers from that perspective as well, and not only go by what they're reporting.
Very interesting, Sandeep. If I remember correctly, you've said in the past that it's a good time to buy the index, right? I'm just wondering what the view is now that you've had a chance to look at all of these numbers, at least from the frontline companies, whether you've crystallized your view and you think that there could be winners even from this pack, and some that might do better than others. And I know what you're saying on artificial intelligence or enterprise AI coming through, but is there a possibility that there could be a little bit of chunkiness in the earnings, and therefore the predictability that you've gotten so used to in the IT space might go away?
No, so I will speak the contrary. I would say that, chunkiness is behind.
Okay.
I feel that from here, there will be positive surprises. You won't see any negative surprise from here on. The reason is simple. The amount of deals which have come. See, I was very skeptical that, this will be the quarter where there will be 20-30% decline in deal wins. But that has not happened. They have all done either in line or better, which means that despite the deflation, they have been able to win so many deals. I'm very positive. I think, from here on, you will see big surprises coming in the sector. Again, I would reiterate that my all optimism doesn't say that, I'm not saying that they will grow double digit and all that. This sector is a matured sector, but 6-7% dollar growth for large names and a better growth rate for mid and small cap. And on top of that, much better margins is what my call is. And if that happens, I think, cumulatively 45-70% EPS growth in next 3 years should happen. And even if the multiples don't re-rate, you will make that kind of return from here on in the sector. So I am still very bullish on the sector. I think the pain has been behind. Time has elapsed. Disruption has settled. This is the time to be in. And so you will make decent money. I will not say, I can't compare it with some of the small companies in other sector and all that. But it is a stable, good sector with good corporate governance, good margins. So I think for funds, it makes a lot of sense.
Fine. Okay. But Sandeep, if I were to push you to try and distinguish between the companies based on the share of revenue that they have, and in traditional metrics, you would look at BFSI, you would look at healthcare orientation, and you would try to gauge based on what the US-based BFSI companies are reporting, whether there would be a greater benefit to certain companies or others. Would you look at it from that lens? How would you try to separate the wheat from the chaff?
So, we have left those lanes in 2020. After 2020, when COVID came in, after that, all these traditional methods of tracking the sector has gone away. And whoever has tried to gauge anything from that, they have become very negative in March 21 when it was bottom. So the problem is that in technology disruption, what happens, not only the technology does disrupt but also the method of tracking the sector has to be disruptive. I think the methods have changed. I don't think that segments make a lot of sense now. Neither do the markets. What more important is today is the technology stack. So we are tracking the companies based on the tech stack, and based on tech stack right now, the limited number of results which have come, broadly everyone is at neck to neck competition with each one. So there is very tough to call or single out one versus the other. I think they have done phenomenal job. The number to track will be the workforce which is trained in AI and what is the revenue of AI in next 2 to 3 quarters. If you get that number close to 35-40%, I think we are home. You will have very, very good growth going forward. If that takes more than 4-5 quarters, then obviously the growth will be slower for some more time. So we have to see. I think the progress till now is very good.
I know you won't give specific stocks, but Sandip, if I were to ask you how you are looking at the companies that have reported so far from the IT pack, how are they stacking up?
Well, they are good. So I will say the results are quite decent for everyone. And first time in a long while, I see, and this is the reason I'm so confident that stability has returned. If you see till last quarter numbers, 2 were good, 2 were bad, 2 were okay. This quarter, I haven't seen a bad number, to be honest. So that gives me more confidence that we are in a stable environment, getting into stability.
When you're saying I haven't seen a bad number, even Wipro, you're including Wipro in that.
So I will not call out again name, but I would say broadly numbers are decent to good. So I think that stability has come into the sector. And incrementally in IT sector, what happens when in one quarter you see stability, then from there things improve always. So last 25 years data, if you see, it has never happened the other way that, once the number has improved, then suddenly next quarter they have fallen. It doesn't happen in this sector because you are building month on month, month on month, month on month. So it is not possible that you will come out with a big negative surprise next quarter. See, the problem is that we are so priced to perfection that 1% Q on Q growth, if it becomes 0.5%, the stock goes down 10%, all that. So don't hold me for that. But I think structurally, you will not see big disappointment from here. There are big surprises, positive surprises, which are more probable than disappointment from here.
Credit where it's due though. Sandip, I think a month or 2 months ago, or maybe 3 months ago, I don't remember the timeline, but he mentioned that he will buy into IT services, and he will avoid ER&D stocks. And I think we've seen the fate of the ER&D stocks, at least even if IT's kind of been steady to marginally higher.
So 6 months ago, Sandip moved from saying that IT is negative to 4 to 6 months ago. IT is negative to now I'm constructive on IT.
So he's got it very, very right. Spot on.
Yeah. All right, Servotech in focus.